Hello girls, I hope you all are doing good. So as you all are aware, we were doing your unit 2, that is cost of capital, in AFM, that is advanced financial management. So we're done with the theory. Okay, so we also started off with the problems and we've completed till illustration 5. Okay, till illustration 5. Your illustration 6 is a homework problem for you, for me, to make sure that you all have understood this particular concept. Similar to this problem only, you have the illustration 6 also. Please do it as a homework problem and please do submit the notes. Now let's move on to your next topic, that is cost of preference share capital. Okay, now cost of preferred or preference share capital. What is this cost of preferred or preference share capital? It is a fixed rate. Okay, it is a fixed rate of what? It is a fixed rate of dividend which is payable on preference share. Okay, it is a fixed rate of dividend which is payable on preference share. Now, though this dividend is payable at discretion of the board of directors, there is no legal binding to pay dividend, yet it does not mean that preference share capital is cost free. Basically, it is telling that usually you pay dividends while you're winding up the particular company or you're doing something, right? So when your company is incurring profits and all of that, so the board of directors will give necessary instructions as to how you need to pay the dividends based on the profits that have been arised to the shareholders. So here in your cost of preference share capital or cost of preferred, it is saying that the rate of dividends is fixed. Okay, that is, the dividend is fixed on preferable on the, it is payable on the preference share. Okay, the rate of dividend is fixed and it is payable on preference share, and the rate of dividend is not cost free. It is not cost free. There will be some cost which will be incurred. Okay, usually dividends are paid on regular basis, but here if there are profits, okay, if dividends are okay, so as you all are aware, dividends are always paid on preference share, but it is not paid on preference share, and dividends are not paid only when you do not have profits. Okay, otherwise dividends are always paid on preference share only to the shareholders. Now let's look into what the topic has to say about. Now in the first point under your preference share capital is cost of irredeemable preference shares. Okay, irredeemable, you cannot redeem this preference shares. The cost of preference share capital is perpetual and can be calculated as follows. Okay, what is the formula? KP is equal to PD divided by NP. What is PD? PD is your preference dividend, NP is your net proceeds, and KP is your cost of preference share. Now we'll be moving on to your illustration problem. Okay, under your illustration problem, that is your illustration 7. Okay, in your illustration 7, it says Archita and company issues 40,000 12% preference shares of ₹100 each at par. Calculate the cost of preference share capital. Now, what was the formula which we looked into earlier? It was KP is equal to PD divided by NP, right? So, let's look into the problem as to what is the net proceeds and all of that, okay? Now, 40,000. What is the company issuing? It is 40,000. It is issuing 40,000 the shares. That is the net proceed. 40,000 will be your net proceeds. Okay, now if 40,000 is your net proceed, then what will be your preference dividend and all of these? How will you calculate your preference dividend? Similarly, how will you calculate your cost of preference share? We will just have a look into this solution. Okay, now in the solution, if you see, it says 40,000 12% preference shares of 100 each. Okay, now what is the formula of this particular solution? Now let's take down the solution for this problem. Okay, solution, take down the formula for calculating preference share capital. KP is equal to PD divided by NP. Okay, now KP is the cost of preference capital. Okay, KP is the cost of preference capital. And this is not given to us. We need to find the KP. Now what is PD? That is preference dividend. It says, if you notice carefully, it says 40,000 12% preference shares of 100 each. 40,000 100 each. Okay, 40,000 shares of 100 each. So you have to take 40,000 into 100. That will give you 40,000 into 100 will give you 40 lakhs. Okay, 40 lakhs into 12%. Okay, because 40,000 shares of 100 each into 12%. Okay, 40 lakhs into 12% will give you 4,80,000, which will be your preference dividend. This is how you find out your preference dividend, that is 4,80,000. Okay, now next what is given in the question is, it says the net proceeds. Now for net proceeds also, what you have to do is basically the net proceeds, just a minute girls. Yes, it is net proceeds. NP is net proceeds. Now again it says 40,000. Company is issuing 40,000. 40,000 of 100 each. So it will be 40 lakhs. Okay. So it will be 40 lakhs. Now substitute this particular equation into the formula. It says KP is equal to PD divided by NP. PD. What is PD? We found out PD is 4,80,000, right? Divided by NP, that is 40 lakhs. So 4,80,000 divided by 40 lakhs. That will give you 0.12. Okay, 0.12, or into 100 will give you 12%. Okay, or it will give you 12%. That is KP.